Okay, welcome to 16-2 notes. They are a little bit longer. We have done closing entries before. They just take a little bit more time than our adjusting entries do. So when we are doing these closing entries for our corporation, once again, we're going to have 4 different types of closing entries. We're going to have closing entries for income statement accounts that have credit balances. So that would be our revenue, so like sales, and then any contra cost accounts. Then we'll have our closing entries for our income statement accounts that have debit balances. So these will be our cost, contra revenue accounts, as well as our our expense accounts. Then we have to have a closing entry to record our net income or net loss into our retained earnings account and closing that income summary out. And then finally, we close out our dividends. So at the end of our fiscal period, the temporary accounts, we're going to close these to help prepare that general ledger for the next fiscal period. To close a temporary account, we have to have an amount equal to its balance recorded on the opposite side. So for example, we know that our sales amount will always be a credit. So if we are trying to close it out and get it to 0, then obviously we need to record that same amount, whatever is in our sales credit, in the opposite side on the sales debit, so we can get that to be 0. So like I said, our goal is to get all of those temporary accounts down to a 0 balance. And so then where are we getting these amounts from to do our closing entries? We're going to find them in our income statement and balance sheet columns from the worksheet, as well as our statement of stockholders' equity. And then just like always, and just like we did with those adjustments, we're going to record them in our general journal. So kind of a review of our permanent and temporary accounts. So permanent accounts, they're also called real accounts, and they're going to be our assets, our liabilities, and our owner's capital. The ending balances of these, they're not going to change. They're going to be the same for the beginning balance of our next fiscal period, which would make sense, right? If we're thinking of cash as an asset, I'm not going to start out with 0 cash just because we're starting a new fiscal period. So permanent accounts, they stay. We don't need to make changes to them. Then our temporary accounts, which are also called nominal accounts. Those are going to be things like our revenue or our sales, cost, any expenses, and our dividends. So these temporary accounts are the ones we're working to get to have 0 balances. Then income summary is also an additional temporary account, and we're using it as we close these things out to summarize all of those entries for revenue, costs, and expenses. An income summary, if you remember, is one of our unique accounts. It actually does not have its own normal balance side. Okay, so then looking here at doing our closing entries for things that have credit balances. Sorry, there's a bug here on my computer. Okay, so credit balances are going to be our sales, purchase discount, purchase returns and allowances. These are all closed into income summary. So remember, we list our debits first. So all of those things would be debits, right? Because we want to get them to 0. And then we would add them up and have our amount that we're going to put in the income summary credit for that one closing entry. Okay, then our next closing entry is looking at income statement accounts that have debit balances. So these are going to be sales discount, sales returns and allowances, all of our expenses, and cash short and over. We're also closing those to our income summary. And so to reduce those to 0, we're going to credit the amount of their balances, and then income summary will be the debit for this one. So you'll start out with income summary, leaving it blank, list all the others out as credits, and then when you get that done, add them up, come back up to that first line, and have our income summary balance or debit balance there. Okay, and then our next closing entry was with the net income. So this will be made for our income summary account because it has a balance. And the balance of the income summary needs posted to retained earnings. So income summary and retained earnings are the two accounts we use here. And then lastly, our closing entry for dividends. So the dividends account is closed to retained earnings as well. So those are the 4 different closing entries we have to do. So just remember, this one is opposite of whatever is on the worksheet, but you're just using the same amount. You're not making up an amount, you're not finding it somewhere else.